Well, Morgan Stanley is quietly bullish on Paytm. It has initiated coverage on the stock with an overweight rating and a target price of 1875 rupees ascribed to the company. Morgan Stanley sees that the risk reward trade-off for an investment in Paytm looks quite attractive. Morgan Stanley also believes that Paytm has built a strong customer acquisition engine, which is payments. And it says that now that it has built this engine, it is now going to leverage on that to provide and expand its financial services offering and its financial services basket. And the key to doing that, Morgan Stanley says, is going to be whether Paytm is able to do that at a lower incremental cost. Morgan Stanley also sees a sharp improvement in profitability as this financial services basket scales up. As regards the scaling, Morgan Stanley says that the total addressable market for the company as well as for the services that the company is offering is quite large, while the balance sheet risk for Paytm is quite low. Morgan Stanley values Paytm at $17 billion using its EV to revenue model of valuation. Mind you, at IPO price, Paytm was valued at around $20 billion. So 15% discount to its IPO price. However, the stock is trading at 1312 rupees a share. So that's a substantial upside that Morgan Stanley is forecasting. The revenue number that Morgan Stanley has taken for the purpose of this valuation is the FY26 revenue number, and then has taken a multiple to arrive at the valuation. Morgan Stanley expects to see a 40% plus CAGR rise in revenue over the next 5 years leading up to FY26. In the interim period, Morgan Stanley also sees contribution margins improving to around 40%. That's by FY26. So that's a very strong set of expectations that Morgan Stanley has put on Paytm. Further, at 1312 rupees a share, which is the market price at close yesterday, Paytm is trading down almost 40% from its IPO price of 2150 and very close to its 52-week low of 1272 rupees a piece, just 40 bucks away from that. So at 1875 rupees a piece, which is what Morgan Stanley's target price is, that's a potential upside of 43% for investors at the current market price. Really strong expectations and upside potential, bullish on Paytm, says Morgan Stanley.